We have earnings in pre-market. We have earnings for SoFi coming up tomorrow, Monday, 4/29, 2024. First thing I want to look at before we even touch on earnings and the history of earnings for SoFi is the dilution. You can see here I'm looking at SoFi shares outstanding, and you'll notice way back in June 1st, 2021, we had 811 million in outstanding shares. Over time, it has increased to a recent high of 976.74 million as of February 15, 2024. So, not much dilution, not like a crazy amount. You're not seeing hundreds of millions or 200 million or 500 million. Nothing crazy, no billions. We're not in the billions. In 3 years, they've only increased the outstanding shares 160 million, 165 million, if you want to be a little more exact, and if we're rounding. But yeah, that is not much dilution, which is good. We love companies that don't dilute, that don't continue to increase the outstanding shares by too much. Now let's switch over to the TradingView financial statements for SoFi, and let me just point out, let's look at the chart. Let's look at earnings. Look at this earnings. It gapped up and then it went from 882 to a high of 938. So gap up and run. Here it tanked. Here another gap up and run. Here it tanked. So what's interesting is if we look at Sofi stock earnings here, you'll notice that it's beat every single time. Every single time it's beat. And I can't predict what's gonna happen because it's so mixed. Like we'll beat and the stock will tank on earnings, even if it beat. And then sometimes it goes up and gaps up and has a run. So what we do know though is anytime it gaps up, it has a nice run. Anytime it beats and gaps up, we have a nice little run afterwards. Usually it peaks as well, and then we start downtrending. That seems to be the pattern. If it beats, here it beat again, and remember it just goes, it just runs up. So I would look for a beat and a run up, a gap up and run. That's the play for earnings, at least for SoFi, because it does come out with its earnings in like, before market even opens. So there's an opportunity there to make money, either day trading or even swing trading it. More than like just day trading and riding the trend if it does trend to the upside. Like I said, sometimes it beats and it it tanks. So that's kind of that sucks. So what we want to see in the morning is this thing beats, it gaps up, and then we want to ride the trend for that day. There's no guarantee that it'll do that. Obviously, you want to have a stop loss or something. You don't want to just buy and hold and hope. But the game plan would be to buy in if it beats and gaps up. Get in there, ride it up for the day, take your profits at end of day. That seems to be what is best for SOFI here. But let's look at that. This is just based on the charts. Let's look at the income statement, and you'll notice quarter over quarter, they have been increasing their total revenue from 389.31 million in quarter two 2022, and then 460 million, 550 million, 607 million, 676 million, 756 million, 871 million quarter four 2023. So it's a steady increase quarter to quarter. Now let's look at the yearly real quick, and you'll notice the same thing. Very steady increase year over year, which is what we want to see, right? It's a company, we want to see it grow, we want to see the revenues increase. We want to see the cost of goods sold be as little as possible. Ideally, the cost of goods sold has stayed in the 200,000 range, but it is nearing the 300,000 range now, which makes sense, right? I mean, if they're making more revenue, I mean, the cost of goods it's going to increase as well. But we hope that it's not so much that it eats way too much into the profits, the potential profits. So I like the cost of goods sold. By the way, I've seen companies that have like 1 billion total revenue, but their cost of goods sold is like it's like 950,000. I mean, not hundred, not nine, no, not 950,000. That would be amazing. 950 million. So like that's pretty bad. Like you're selling a hot dog for $1, but you're only making 5 cents off of every hot dog sold. I mean, it's still money, sure, but ideally you want to make as much as possible while keeping the cost of goods sold as low as possible to maximize profits, obviously. Gross profit, operating expenses have stayed in okay. Yeah, I'm looking at this and I'm thinking this. I mean, the growth trajectory that it's on, I would expect a good beat and an increase in total revenue, possibly finally reaching the 1 billion mark for the quarter. By the way, not talking about the yearly. Yeah. So I mean, it looks like look honestly, look, it looks like SoFi is headed towards a really good year, like a year of profitability because it hasn't been profitable yet. But we'll see what happens moving forward. Yeah, this has been insane. Usually, let's look at total assets to liabilities. Oh, yeah, yeah, the assets to liabilities is good. 30 billion versus 24 billion. Let's look at the yearly. Yep, 30 billion versus 24 billion in liabilities. So we're good there. That doesn't that yeah, we're not that that isn't going to be factor. So just on looking at financials, it's looking like we should, if they beat, we should have a nice run. That's really the point of this video. But overall, the company is growing, right? So a long term hold, it's also a good long term hold. But I would recommend buying under $7.50, and I'll show you why. Ooh, descending triangle. But yeah, this thing always comes down under 750. Like this is where we hold at 715. It comes down to 715. By the way, this is the monthly chart. We have a lot of support here. Buyers always step in and buy the dip here under 750. So that's what I'm saying. If you're going to look for a long-term hold, probably 750 and under is when you want to buy. That's like the best opportunity to start accumulating. If you're more of a long-term holder, if you're a swing trader, same thing, buy under 750. But for the earnings, definitely look for a gap up and go. Yeah, it gaps up and it just runs. That is what I'm looking for. And that is it for the video. As always, don't forget to like and subscribe for more analysis like this. I will see you guys in